Thanks for joining us. Happy Friday to you. We are so glad you could join us here on the Market Day Report. I'm Marlon Bowling with you as we look at our final trading day of the week, and it has been one big adventure here in the ag commodity trade, that's for sure. Of course, we had the WASDE numbers that came out at midweek. Yesterday, we had the big reversal action in the grain markets. Many of the commodity markets yesterday had some wild days. And I wanted to review, for one thing, USDA had some new overnight export activity to talk about. And then I want to look at the overnight trade too. Soybeans were sold to China once again. Now this time it was a little bit smaller amount. It was 108,000 tons. We had a sale of corn to Japan. Now the rumor was that we had sold maybe as much as 2 million tons of corn to China. No hint of that here at all. So 128,000 tons to Japan instead. Maybe that's a disappointment. I don't know how the trade's going to interpret that. Soybean oil, 30,000 tons were sold to unknown destinations overnight. And that's it. That's the makeup of our overnight sales activity. Now, and this information just came out just moments ago. Now let's look at this overnight trade. And we wrapped up the overnight trade before this announcement came out. So we had the corn market. These quotes provided by bar chart show March at 645, and that would be 3 1/4 higher this morning. And December corn, 3 1/4 higher at 588. Remember the big turnaround we had yesterday in the market? Soybeans yesterday, if you recall, they had something like a, 65 or almost 70 cent swing, I think, from the high to the low. Just a wild day. Well, overnight, March soybeans were 11 3/4 higher at 1586. And it had a low overnight of 1568.5 at a high of 1592 1/4. That'll give you an idea of the range overnight. And if we look at that new crop November contract that everybody's tracking for their new crop hedging opportunities, it was 14.45 3/4 this morning. That was up 13 3/4 cents here. Now, on the wheat market in the overnight trade, we go to Chicago first, and we had the March up 9.5 cents. It was at 7.81. Now, we had a wild ride in the wheat complex yesterday as well. Kansas City gained back 4 cents last night. It was at 8.05 on that March contract. Minneapolis spring wheat had the March contract 4 1/4 higher at 946.5. I want to bring in Brian Hoops of Midwest Market Solutions and talk about the volatility that we have seen here. And tell you what, it's time to buckle up and get that crash helmet out here, Brian. It's getting that time of year, and we haven't even put a seed in the ground yet. What do we do with this?
Yeah, good morning, Marlon. It certainly felt that way yesterday after we had that big sell-off. It was inspired by farmer selling and some profit taking. And you really can't blame a farmer for wanting to sell $16 beans or $6+ cash corn and bank some of that money. Same thing for some of these traders. We've gone straight up for a long period of time, and a little correction was inevitable, but we did not make new lows overnight, kind of held those lows and started to rally. And I think the key today will be, can we build off of this overnight recovery? We closed, 3 higher, as you mentioned, in the corn overnight. Can we build on that and close a little bit stronger? I don't know that we go back and make new highs anytime real soon, but weather is still adverse in South America, telling us that crop sizes are probably in decline. Plus, you had some export business this morning, first sale of corn in quite some time, and that should be viewed as positive by the trades. Hopefully, we can continue to, find some more buying interest and push this market a little bit higher. You just don't want these buyers that surfaced overnight to turn into sellers on the opening this morning and just go home for the weekend.
Well, that's a good point. Everything seems to be about the money flow nowadays, and some of the action in the outside markets could determine that too. We'll talk about that as well as our livestock trade. Brian, we'll bring you back in just a moment, and we'll discuss. Let's go back and talk with Brian Hoops of Midwest Market Solutions. Brian, we've had all kinds of activity, not just in the ag sector itself, but a lot of influence coming from the outside markets. A lot of concern about inflation, a lot of concern about interest rates, a lot of concern about what's going on in the equity markets. Is that a safe haven, or is it better to have a hedge against inflation with commodities? And that is driving a lot of talk among the managed money funds out there. I want to take a look at the Dow Jones Industrial Average this morning and some of these outside markets, and maybe that will have an impact on our ag trade. The Dow, very quiet here this morning. March futures down 17 points at 35,122. One thing that could be significant today, we have the March U.S. dollar The index trading 242 points higher. It's at 95.790. Sometimes that can be a bit of a negative to the trade. On the other hand, if you look at the West Texas Intermediate crude oil, March is up $1.08 this morning at 90.96 per barrel. That could be significant as well. But when it comes to the trade on the livestock yesterday, we had cattle, after being higher along with the grains early in the day, they flamed out late in the day. And we had April live cattle closing 95 lower at 146.87, if you recall. And on the feeders, we finished the day yesterday with April 82 cents lower at 171.75. It was much closer to the low of the day than it was the high when it closed up yesterday. Lean hogs, we had April down $1.35 at 103.42, and same story there. It got as high as 107.70 into new contract highs, and then it faded away from that by more than $4, Brian. That was kind of a scary turnaround as well, wasn't it?
Yeah, a lot of markets did have this big turnaround that we have been discussing in the grains. It flowed into livestock as well, and you really hit the nail on the head when you talked about money flow, and that's what I think drove the cattle and hog prices off of their highs. You know, cash cattle trade pretty much wrapped up for the week at $2, maybe $3 higher than a week ago. So some decent cash trade on a dress basis, live about $1 higher. So it's been a strong cash markets. I think we're starting to look ahead to next week, and maybe the slaughter pace starting to slow once again, and the fact that steer weights are still much heavier than a year ago levels. That's a disappointment to the trade. They were up 3 pounds last week, 8 pounds heavier than a year ago. And this is a time when we thought we'd be losing some weights because of some cold weather conditions, and we were getting more aggressive in our marketing, and that wasn't the case. So a little bit of a dip after some of that news came out, but a lot of it, I think, was due to some money flow. And it looks like we're going to start the livestock markets on the defensive here this morning.
Okay, well, very perceptive, and thanks for sharing the comments with us today, Brian. You have a good weekend. We'll check in with you next week. Brian Hoops of Midwest Market Solutions. Janet, we are ready to fasten on the helmets and get ready for another possibly crazy day in the markets. So stand by for anything today.